Right. So very good evening. In our last session, I was discussing manufacturing accounts, and we did 4 questions related to manufacturing accounts. Right. 4 very basic questions. So today I'm going to continue with the same because there are some students who wanted to do few more questions from the manufacturing accounts. So I will do few more questions related to manufacturing accounts today. Okay. Right. So before I move on to the main questions, I would like to do some MCQ questions. Right. So let me do some MCQ questions. Right. So let's do this question. This is actually from one of the chartered papers. Right. Okay. So here is the question. Hope you all can hear and can see the screen. The following information relates to a company at its year end. Inventory at the beginning of the year. Raw material, work in progress, finished goods. Inventory at the end of the year. Raw material, work in progress, finished goods. Right? Then purchase of raw material, direct wages, production overheads, distribution cost, administration expense, sales. The cost of goods manufactured during the year is, what is the answer? So can I have the answer? What is the total goods manufactured during the year? You can have a basic manufacturing account to calculate the total production cost. What is the answer? What is the answer? Can you tell me? Okay, so inventory at the beginning, raw material, it's 10,000. Work in progress, opening is 2,000. Closing work in progress is 4,000. Closing raw material is 11,000. Right? Purchase of raw material, 50,000. Okay. So raw material, work in progress, purchase of raw material, direct wages. Direct wages. Direct labor and other, 40,000. Production overheads. Factory overheads. Production overheads, 60,000. Distribution cost, administration expenses, sales. So these things won't come to the manufacturing account. Okay. Right. So can you all tell me how much is the total cost of goods manufactured during the year? Yeah. Tell me the answers. Calculate the cost of goods manufactured, and also I want to know the gross profit. How much is the gross profit? Yes. How much is the cost of goods manufactured during the year? You can also calculate the net profit. Right, so let's calculate the answer. Raw material consumed is 49,000, direct wages 40,000, prime cost is 87,000. Prime cost is 87,000. Then we add the total production overhead. 147,000 is the total production cost. That is the cost of goods manufactured. Cost of goods manufactured is 147,000. Right? Now, the next question is calculate the gross profit. What is the gross profit? How do you calculate the gross profit? Yes. So gross profit we have to calculate using the trading account. Trading account. So let's draw a simple trading account, right? Trading and profit and loss account. Trading and profit and loss account. So how do you calculate the gross profit? Sales minus cost of sales. Sales minus cost of sales. Cost of sales is calculated opening finished goods. Then we add total production cost. And we deduct closing finished goods. Then the answer is gross profit. Right, so how much is the gross profit? Sales is given 300,000. Opening finished goods 34,000. Closing finished goods 30,000. It's minus total production cost is 147,000. We have to take this amount and cost of sales 151. Therefore, gross profit is 451. Sorry, it's minus 149,000. 149,000. That's the gross profit. Then to calculate the net profit, what we have to do is we have to take distribution cost and administration expenses. Distribution cost, administration expenses. 55,000, 7,000. So total is 125,000, then the answer is net profit. So based on the information we have, we can do all these calculations. So the net profit equals 24,000. Net profit is equals to 24,000. Okay. So if they ask any of these things, you can do it. Right. So here I was explaining after the manufacturing account how to prepare the trading profit and loss account. So we take the total production cost to the trading account as cost of sales. Right. So in a normal trading account, here we have is what we have is the purchases. But in a manufacturing account, here we will take total production cost. And also sometimes remember, they might purchase finished goods from outside as well. So here there can be total production cost plus purchase of finished goods as well. Right. So that's how we calculate the total production cost and gross profit and net profit. Right. So we'll move on to another question. It's also another MCQ question. There is a doubt. What about goods drawings? So if there is any drawings, that will be deducted from here in the cost of sales. Goods drawings. Goods drawings will be deducted before the closing finished goods. Okay. Right. So let's move on to another MCQ question. Tell me the answer for this. What is the prime cost? The manufacturer has the following figures for the year ended 30th September 2006. What is the prime cost? So here there is a new thing that you are learning. Increase in work in progress. If the work in progress increases, what will happen to the cost? Right. So here they have not mentioned whether this work in progress is adjusted to prime cost or total overhead, total production cost. If they adjust this to the prime cost, then work in progress will be, the prime cost will change. If the work in progress is adjusted to the prime cost, then this adjustment is done before the prime cost. If they have not mentioned, this work in progress will be adjusted to the production overhead, total production cost. Right, so here the direct material. Let me take this. Direct material is 8,000. Factory overhead is 12,000. Factory overhead is not prime cost. Direct labor is 11,000. Then the prime cost is 19,000. Prime cost is 19,000. Now the work in progress will be adjusted to the total production cost. Can you tell me how much is the total production cost? This is important. Tell me the total production cost. What you do for the prime work in progress. What do you do for the work in progress? Do you add or deduct? Increase in work in progress. Yes. So if the work in progress or the stock increase, I'll tell you the relationship. If the closing stock increase, the cost will decrease. If the closing stock decrease, the cost will increase. Right? So simply what you can understand is closing stock is having a negative relationship. Closing stock and the stock. Right. Let me explain once again. Take this example. Work in progress. Opening stock minus closing. So what happens is, let's say opening stock is 1,500. Closing stock increasing. If this increase, what happens? Let's say 2,000. Then what is the net result? Right. So if the closing stock increase, what happened to the cost? Decreased, right? If the closing stock increased, when the closing stock increased, cost is decreased. That's the relationship. If the closing stock decreased, let's say we take it 1,000, then what happens? Opening is 1,500, closing is 1,000. If the closing stock decrease, here this relationship, cost is increasing. So remember, there is a negative relationship between cost and the closing stock. Let's put it this way. Relationship, cost and the closing stock. There is a negative relationship. Then opening stock and the cost, there is a positive relationship. So write this as a note. This is an important note because in future also you might need this. concept. Not relationship between closing stock and the cost, opening stock and the cost. See, if you take opening stock, if the opening stock increases, then cost will increase. If the opening stock decrease, cost will decrease. Is it clear? Any doubts? So here what has happened is increase in work in progress. So if the work in progress increase, cost will decrease. From, let's say, from 10,000 to 14,000. If the closing, if the work in progress increase, then your cost will decrease. See, from 10,000 to 14,000, the work in progress has increased. Then the cost will reduce 4,000. Okay. So total production cost will be 27,000. Any doubts? Right. So let's do another MCQ question. Is it clear? Is this question clear? Right. So let's do another question. Tell me the answer for this. You are given the following information for the year ended 31st October 2007. 31st October 2007. Value of factory cost of goods completed. What is the answer? Third one is decrease in inventories of raw material. It's raw material decrease. Decrease in inventories of raw material. And this is the work in progress. What is the value of factory cost of goods completed? I got one answer, 182. Let's see from others. So shall we check the answer? Purchase of raw material 112,000. Return inwards. Do you take return inwards? No, we don't take return inwards. We don't take return inwards and also carriage outwards. Return inwards, carriage outwards. Return inwards goes to income statement, deduct from the sales. Carriage outwards is a selling and distribution expense. So we don't take these two. Carriage outwards, return inwards. Direct wages, we have to take it. It's 42,000. Carriage inwards will be added to the purchases. Carriage inwards will be added to the purchases. 3,000. Production overheads, it's factory overheads. 27,000. Now we have the material and work in progress. So as I said in the previous note, this is the relationship. Closing stock, there is a negative relationship. If the raw material decreases, decrease in raw material. If the raw material decrease, the stock, the cost will increase. Yes. Right? If the raw material decreases, the cost will increase. Work in progress increased. Increase in work in progress. Then what happens? Cost will decrease. So we will get the answers. Raw material consumed will be 123,000. Direct wages 42,000. Increase in work in progress 10,000. Production overheads 27,000. So the total production cost will be 182,000. Any doubts? Remember this note, how the relationship works between the stock and the cost. Stock and cost. Any doubts? So let's do one more MCQ. Tell me the answer for this. What is the answer for this? Asking us to calculate the closing work in progress. Find cost 56,000. Factory overheads 4,500. Factory cost of goods completed 57,000. That is the total production cost. Total production cost is called the factory cost of goods completed. This is the total production cost. Yes. Tell me the answer. Opening work in progress 6,200. What is the closing work in progress? So here the total is 60,000. What is the answer? Right. So let me do the answer. So net amount is 57 minus 6,500. So net is 3,500. So what is the closing work in progress? That will be minus 9,700. So if it is 9,700, then only the net value will be minus 3,500. So that's the answer for this. Let's do another past paper question. This is actually from 2019 paper. 2019. Now, those days we had a separate question from manufacturing account. Now they are giving this as a MCQ. You don't get a separate question most of the times. It will be an MCQ question. What is the answer for this? Prime cost and the total production cost of manufacturing business for the year ending 31st March 2019 were 900,000 and 1.6 million respectively. Prime cost and total production cost. The work in progress inventories which were measured at production cost as at 31st March 2018 and 31st March 2019 were 200,000 and 330,000 respectively. What is the production overheads for the year ending 31st March 2019? Tell me the answer is prime cost. Then we have production overheads. Then we do the adjustments for work in progress. Complete work in progress minus closing work in progress. WIP. Answer is total production cost. Right. So what is the answer? Prime cost is 900,000. Normally what you have to do is uh, draw the format and record whatever the information that is available. Then find out the difference like we do for the incomplete records. Total production cost is given. We have given the total production cost, which is 1.6 million. The prime cost is 900,000, total production cost is 1.6 million. Work in progress inventories which were measured at production cost. 31st March 2018, it's 200,000. That's the opening. And 2019, 330,000. So the net amount is what is the production overhead? Okay, so to find out the answer, it's 1730 minus 830,000. Production overheads is 830,000. Yes, 830. Any doubts? Let's do another question. There is a doubt. In a situation where they haven't told where to record work in progress, where should we record? We have to record to the total production cost. If they have not mentioned about where to record work in progress, you have to adjust it to the total production cost, right? Not to the prime cost. So if it is for the prime cost, they have to mention it's for prime cost, right? So let's do another question, not an MCQ. This is question 5. The question. First, I will read the question. Nimal Steel Manufacturers. A subcontractor for sewing machine manufacturer. For a sewing machine manufacturer is a specialist in sewing machine cabinets. Trial balance of Nimal Steel Manufacturers as at 31st December 2009 included the following: raw material stock, fire insurance new policy, direct wages, raw material imports, local purchase of raw material, cost of furnace oil for heating, electricity, water, plant machinery, tools and dies, repair and maintenance of tools and dies, repair and maintenance of plant and machinery, salaries, insurance, rent, rate, staff welfare, general expenses. Then there are 7 additional information required to prepare the manufacturing account of Nimal Steel Manufacturers for the year ended 31st December 2009. Right. So let's draw the format. So let's draw the format for this. So this is question number 5. Last in the last session we discussed 4 questions. This is question number 5. Draw a format. Nimal Steel Manufacturers manufacturing account for the year ended 31st December 2009. I have sent this in WhatsApp. This question. Question number 5. Draw the format. Direct material, opening raw material plus purchases minus closing raw material. Raw material purchases minus closing raw material. So the answer is raw material consumed. The direct labor and other work in progress is adjusted to the prime cost. The work in progress as at 31st December 2009 should be valued at prime cost, which includes heating cost too. So heating cost is prime cost. There was no work in progress at the beginning of the year. And keep more space for the factory overheads. I need direct labor and other. I might need 4 lines. Factory overheads. We need about 15 to 16 lines. Space. This is space to keep. Here maybe 3. Go the format and start with additional information. Shall we start now? Okay. So we will start from the additional information. So always remember the steps. First the format, then the additional information, then the trial balance. First step. So the second step, additional information. Following additional information was available. Inventories as at 31st December 2009 were valued as follows. So these are closing inventories. Raw material cost is 450. Furnace oil is 25,000. So first, let's record the closing work in progress. Closing raw material, 450,000. Closing work in progress is 450,000. Right here. Then we have the furnace oil, 25,000. Furnace oil is direct expense because they have specially mentioned here. Work in progress as at 31st December 2009 should be valued at prime cost, which includes heating cost too. In the trial balance, it says cost of furnace oil for heating, 225,000. Furnace oil means the oil which is used to heat. So it's a prime cost. And we have to take this to the direct cost. So it will be treated as direct other cost. Direct other cost. Furnace oil is treated as a direct other cost. So let's take furnace oil. How much is the expense? The cost of furnace oil for heating is 225. 225,000. And there is 25,000 closing stock. So the expense is 225,000 minus 25,000. Closing stock will be deducted. Then we have to take only 200,000 as the expense. It's a direct other cost. It's a direct other cost. Closing stock will be deducted because it's like a prepayment. It will be taken, 25,000 will be taken to next year. So that's the closing stock. Let me know if you all have any questions. Okay? Spirit closing raw material and concern. Number 2, the progress of manufacture in the factory for the year was follows. So this is the progress. Number of completed cabinets. Number of cabinets completed during the year 9,000. So during the year 9,000 completed. Number of cabinets in which work in progress as at 31st December. Another 1,000 cabinets under work in progress. It is half done. So total 10,000 cabinets started during the year, 9,000 completed, another 1,000 is under progress, work in progress. So this information we might need in future. So this is needed to find out the closing work in progress. If the work in progress 31st December should be valued at time cost. So they have not given the work in progress value. We need to find out. There is no work in progress at the beginning of the year. So beginning of the year it's 0. Closing we need to find out. To find out this, you might need this information because number of cabinets work in progress is 1,000. So we need to find out that. Okay, let's continue. Number 3, 25,000 of rent was relevant for administration. Rent is given here, 145,000. So out of 145,000 rent, 25,000 is for admin. So we have to deduct it. 145 minus 25,000. So only 120,000 belongs to the manufacturing. Second adjustment, I have to do it. I still didn't do it. Okay? We will do it when we calculate the closing revenue. Number 4, the plant and machinery tools and dies were to be depreciated by 400. So that's the depreciation. Depreciation, plant, machinery, tools and dies. Which is 400,000. It's the depreciation. So here you don't need to take the cost of plant, machinery, tools, and 4 million. Out of 4 million, 10% they have depreciated. 400,000. Remember, you don't take the cost, you take only the depreciation to the manufacturing account. Rates, general expenses, staff welfare cost, factory is only 80%. Remaining 20% is for administration. So can you take the rates? Rates 10,000. Out of 10,000, only 80% belongs to the factory overheads. Rates only 80% belongs to the factory overheads. Then staff welfare. So it can be general expense. $130,000, 80%. General expenses, 80%. Staff welfare also 80%. 84,000, 80%. $8,000, 104,000, 67,200. So we took rates, staff welfare, general expenses. Rates, staff welfare, and general expenses. Then another very important adjustment. The quality controller's salary, 10,000 rupees per month, for December 2009 was payable and had not been accounted yet. Staff salaries included quality controller salary for 11 months only. So here in the trial balance, there is staff salary. Salaries, factory staff, 610,000. So this includes quality controller salary. This includes a quality controller salary where only 11 months salary is paid. So the 1 month salary is payable. And also, management had decided to pay bonus on a scheme as given below. Factory labors 10 rupee for each unit of production started during the year. Can you all tell me how many units started during the year? How many units started during the year? Is it 9,000? 9,000 is completed during the year. Another 1,000 is work in progress. So how much is started? How many units started during the year? Started 10,000. You start 10,000, out of that 9,000 completed, another 1,000 is in progress. Okay, so for factory labors, 10 rupee for each unit of production started during the year. So if they started 10,000 units, if they start 10,000 units, we have to pay 10 rupee each, 100,000. Then for factory staff, 10% of the annual salary. Quality controller, 20% of the annual salary. Right. I'll give you a few minutes. Can you all tell me the bonus? How much is the bonus for each type of staff? How much now for factory labors? I already told it's 100,000, 10,000 units into 10 rupees, right? So here's the factory labors. Means direct wages. Direct wages are the factory labor. So bonus for factory labors, 10,000 units into 10 rupees each, 100,000. Direct wages, 700,000. I need the bonus for factory staff and quality controller. Bonus for quality controller. So we will have salary for factory staff, salary for quality controller, bonus for factory staff, bonus for quality controller. We need these points. Tell me the values. Can I get the answers? Okay, let me explain the salary. If you take the factory staff salary, here in the trial balance, they have given 610,000. So factory staff salary, which is given in the trial balance, is 610,000. I'm doing a working for the salaries. And this can be divided into two. Factory staff salary, you can divide into two. One is quality controller salary. Quality controller. Other one is factory staff. Quality controller and factory staff. Right, so this is the amount which is given in the trial balance. Then out of this, quality controllers 11-month salary is given. 11-month salary means each month he gets 10,000. Salary is 110,000. Right, so this 610 includes 110,000, which is 11-month quality controller's salary. And the remaining salary belongs to the factory staff. So how do you calculate the remaining salary? Which is 610 minus 110,000. And how much is the answer? 500,000. Okay. So 110,000 belongs to the quality controller. Factory staff salary is 500,000. So only 11-month salary was paid to the quality controller. We need to pay another 10,000. So payable 10,000 to the quality controller. Right? So paid is 10,000. This is 110,000 paid. 10,000 is payable. So the total salary of the quality controller is 120,000. Total salary for the quality controller is 120,000. Factory staff, it's 500,000. There is no payable. Annual salary. Is it clear? The quality controller and factory staff. So under expense, factory overheads, staff salary. Salary for factory staff is 500,000. Salary for quality controller is 120,000. Total 620. 610 plus 10,000 payable. 620. So I have divided it because I want to find out the bonus. Now we can easily calculate the bonus. Bonus, factory staff will get 20% of the salary. Factory staff will get 10% of the annual salary as the bonus. Then quality controller will get 20% of the annual salary. 20% is 24,000. 10% is 50,000. %, is 24,000 for quality controller. Here it says factory staff 10%, quality controller 20%. Okay, so factory staff 50,000, quality controller 24,000. So this is about the salary. Salaries and bonus. So you can write down this working. This factory staff salary paid. Let's say other factory staff. Factory laborers bonus, I calculated here, 10 rupee for each production started, 10,000 units, so 100,000, which is a direct labor cost. Direct labor cost, 100,000. Factory labors. Take it under direct labor. Then the last adjustment. So it says fire insurance relate to a new fire policy for the period 1st October 2009 to 30th September 2010. We are preparing accounts for 2009. That means there is a prepayment. There is a prepayment in this. So I will write it here. There is a fire insurance policy of 40,000. It's given here. Fire insurance policy 40,000. 40,000. Right, this is paid from 1st October 2009 to 30th September 2010. Can you all calculate and tell me how much is the prepayment? What is the prepayment for salary? What is the prepayment for salary? Salary prepaid. How many months prepaid? So the financial year, our financial year starts from 1st of January 2009, year end is 31st December 2009. This is our financial year, 12 months. When the fire insurance policy was obtained, the period 1st October 2009. 1st October 2009 is here. To 30th September 2010. Right? So for this year, for the current year, how many months? How many months belongs to current year? And how many months belongs to next year? So next year means this is the prepaid. So how many months prepaid? Can you all tell me how many months prepaid? So this duration is prepaid. So it's prepaid for 9 months. Prepaid for 9 months. $40,000 is the total amount out of this 9 over 12. It's prepaid. Then it's 30,000. 30,000 is prepaid. Okay. So only 10,000 belongs to the current year. So expense for the current year is 10,000. Expense for the current year is 10,000. So we can write this working number 2. Fire insurance policy is only 10,000. From 40,000, 30,000 belongs to next year. Only 10,000 belongs to the current year out of fire insurance policy. Right? So that covers the additional information. Then we have to record the remaining balances from the trial balance. Raw material stock 1st of April 390,000. Okay. Raw material imports and local purchases are there. So we can show separate raw material purchases and raw material imports. Local 1860 and imports 1.2 million. And the total purchases 3,060,000. Local purchases and imports. Then we have other factory overheads. Electricity 12,000. Water 73,000. Repair tools and dies, repair plant and machinery 130,000. 148,000. Insurance factory building. Insurance factory building 134,000. Can you all calculate how much is the closing work in progress? Raw material consumed is total. Direct labor other 1 million. Can you all calculate how much is the closing work in progress? and find out the total production cost. What is the answer? Right. Can I get the answers? Is it done? Do you need more time? Okay. So let me discuss the closing work in progress calculation. Now, the total prime cost before the work in progress is 4 million. This is the prime cost before adjusting for the work in progress. Right, so they have spent 4 million for 10,000 cabinets. 4 million spent for the 10,000 cabinets prime cost. Out of these 10,000 cabinets, there are 1,000 cabinet which is under process. So the closing work in progress, we need to calculate 4 million is divided by 10,000 and multiply by 1,000. 4 million divided by 10,000 is 400 rupees. So for each cabinet, they have spent 400 rupees prime cost. Then 1,000 cabinets, you have to multiply that by 1,000. So the work in progress, closing work in progress is 400,000. 400,000. Right? Out of 4 million, 400,000 is work in progress. Therefore, the prime cost is 3,600,000, 3.6 million. Prime cost is 3.6 million. Okay. Now the closing balance, total production cost is prime cost plus total production cost 5,483,200. Right. Right. So I hope you all understood this part. Okay. So if you all have any other questions, you all can let me know. Uh, so tomorrow I will be uh, doing PPE, property, plant and equipment, the depreciation adjustment and the disposal adjustment in the paper class. Okay, so don't miss the class. It will be a special class, right? Uh, you can learn a lot of things on uh, depreciation adjustment because that's one of the important key question in the paper. Okay, so we'll conclude the session from this question, uh, and I'll see you tomorrow. Okay, good night. Take care and God bless you.